All right. Mr. Ron Bittner with us today. Go ahead and introduce yourself, Ron, and tell us what you're going to talk about, and we'll go through your slideshow.
All right, sounds great. So my name is Ron Bittner. I'm Ingalls. We're an intermediary business broker in Rochester, New York. I've been with the firm since the beginning of the pandemic, back in March, long time. Prior to that, I was a printer, just like all of you. For 18 years, I owned a print shop in Rochester named Pixos Print. That's where we ended. We started out as a franchise. I owned it with my brother, Mike. So as I said, we opened in 01 and sold in 18. So what I'm going to do is I'm going to talk to you a little bit about who Klassen Ingalls is, to give you an overview. And most of my time I'm going to spend talking about Pixos, background on Pixos Print, and the process of our sale. For me, as an owner, when I went through it, I had not heard a lot of stories or experiences of people, other printers going through the sale process. So I think I would have appreciated hearing that from others. I heard really top level kind of information. People were hesitant to share with me their experiences. So I'm going to spend most of my time talking about that. And then I'll talk to the process of going through the sale, a little bit about mergers and acquisitions, valuation, where I see the current market, and what's important when you work with an intermediary or a business broker. Next slide, please. My notes, I got to use my glasses on my own notes. So a little bit about Klassen. As I said, we're privately held. We're in Rochester. We cover mostly upstate New York, Buffalo to Syracuse, helping businesses with less than 10 million in revenue sell their business. We also cover, we have other territories which we cover out into Massachusetts. The company's been in business since, I think, 81. The current owner, who's unfortunately sick today, not with COVID, Arthur Kaempffe, bought the business 6 years ago. There's 12 brokers, and one key feature that we have is the size and scale of our buyer database. So what helped me sell my business was the scope and scale of the interactions that Klassen had with buyers, potential buyers. And I'll go through that a little bit. I will, next slide.
We're going to skip over Arthur? Or?
Well, I'll give you a little bit about Arthur. He's in here. His slide's in here, so we'll hit it. Like I said, Arthur's the owner. Arthur has a lot of experience. I met Arthur. We both were in finance at Xerox together. And Arthur, from there, owned his own business, worked in corporate, and he's been very active in this market that he now serves, both, like I said, owning a business and selling businesses. And I think he managed a franchise, and he's been doing this for 6 years, and very, very skilled, strong in the valuation area, and also understanding how to facilitate deals, which is obviously a key feature of this. Actually, next slide, please. So about me, as I said, I started a franchise printing business from scratch in 01. Grew it to about 20 employees, including the 2 owners. And prior to that, I worked at Xerox in finance 7-8 years, and commercial banking. Prior to that, I've got a finance MBA, and so I'm a finance weenie by trade and experience, but also a printer. And now I help businesses, so I can hopefully bring a business owner and finance experience together and help people sell their businesses.
Real world experiences plus education.
There you go.
Like it, Ron.
Thank you. All right, so let's get into a little bit about Pixos. I imagine that my story, Pixos' story, is a lot like yours, the people attending. We became a digital commercial printer. We started out in '01, so we started out in a recession from scratch. So it was actually fortuitous because we didn't know any different. We had no sales, and so we didn't really understand the pain that we were going through compared to our competitors. We started with just a QM46, a Doc 12, IR 600, 5 employees, including us. And we just kept what worked best for us was selling digital color. So we just hammered the Doc 12 for the first few years until we finally got break-even point. And over time, we just progressed through in digital color. That was our focal point. That was our strength. We found that our customers, we leaned into customers who looked for that service. We built services or bindery equipment with the help of Skandacor around digital color. We expanded into medium run color by investing in a DI, actually in the beginning of the last recession. So our biggest investment to date at that time was in '08, '09. So we invested $300,000-400,000 at the time, and we knew the recession was starting because we wanted to just lean in and attack the recession and come out of it as best we could. And we weren't going to hold off on the investment. And that was fortuitous for us because we built a culture around with our employees to say, this is a recession, we can't control that, but we can control how we're going to market, how aggressive we're going to be in sales, that we're all going to work towards figuring out how to get through this tough time. We lost, I think, 15% in sales for a year, and then we regained it back the next year. And so the benefit to us is we continued to strengthen our processes. We kept all our employees, which we could do at that time, and understand this is a completely different scenario. And we came out of it better off versus our competitors. So as we continued on over the next 10 years until we sold, we progressed into a series of iGens. It was our forte. We built processes and kind of project-oriented custom projects for our customers, which many of you do. I get it, that isn't necessarily unique, but that was really where we focused, building a front end all the way to the back end, and then print was kind of an outcome for us. And that helped us develop larger customer relationships, kept the relationships sticky, and so it helped us quite a bit. We, in 2015, we went independent. It was just a good time for us to leave the franchise. There was a concern, the franchise clearly expressed concern to us that it would affect us if we ever would sell. And my sense is it didn't. It probably was a non-issue either way. And then, again, actually the biggest investment we made in our whole life as owning Pixos Print was the year before we sold. So we got into flatbed printing, flatbed cutter, and all associated large format bindery equipment. And we were fortunate. We had a big project that year that peaked our sales. We grew our revenue, I think, 15% that year. And we hit our peak in our life as Pixos Print in the year before we sold. All right, next slide, please. So I'll hit on some of the strengths and then a few weaknesses that we had in preparing for sale. Because I had the financial background and the financial focus, I was, from the beginning, even when we didn't make money, I was focused on cash flow. So when you sell, you're always looking at, everybody I think knows this, seller discretionary earnings. And we were a top quartile in profitability metrics. So all the way through the P&L, we continuously looked at where our ratios were. Our financial reporting was great, and I find since I sold 2 years ago, I was actually looking at buying businesses throughout the country. And it's surprising how many small businesses, even of some scale, have poor financial reporting. And that's a serious problem, because it's hard to trust what the business owner is saying. And in the end, that's your record. That's what counts. You got to see the financial reporting. We had good financial reporting. As I said, we had good trends in sales. I think for 2 years we had single-digit sales growth, and then the last year as I said, we grew 15%. The margins or ratios that I found important, some of the key ratios, we looked at the contribution margin, gross margin. We always looked at our expense lines as a percent of revenue, and then current ratio. We had key personnel. We developed personnel so that we weren't the whole business. Throughout it, we had a good manager, and we had key personnel in each of our profit centers or departments, from design through finishing. Solid customers, that was important. Not only were they, everybody wants a lot of customers, top 20 customers, you look at the percent concentration, as well as, we had good receivables. So we had customers who paid us. And they paid us, that was key, right? So when you're selling the business, you want to make sure you're going to get paid, not just book the top line. And our receivables, we kept below 45 days. Very low bad debt. I think we had $10,000 in bad debt over the life of our business. And so we weaned out customers that were problematic. And we had, everything was electronic, estimating, invoicing, web to print. We stayed consistent on equipment investments. I touched on that. We had really good vendor relationships. Hopefully Bob and John will agree. We stuck with our vendors. We worked with them. We were demanding, but I think at the same time, we appreciated what they had to offer, because we needed our vendors to ensure we stayed. It was the on-time percentage. We're a digital printer. We had to turn quickly. We required our equipment to be up. Bob would sometimes spend nights over at our place making sure our laminating equipment was up. But and we paid our vendors well on time. And I'm sure John will say that I didn't negotiate very well.
It's very good payer and a very good negotiator.
And so I thought we were a turnkey operation, that if we sold the business, that the new owner could come in and just turn it and run with it. Next slide, please. We did have a few weaknesses. We did have a high concentration in our top customer, and all our sales were attributable to the two owners. And then we had as I mentioned, we had an exceptional project, large project in the year before sale that obviously was not going to continue thereafter. So we had to take that into account when telling our story and selling the business. All right, next slide, please. So the sale process, I'll take you through this because I think it's indicative of what you'll see. And this is the part that I thought that was new to me, and I just learned as I went. I chose to go to get a valuation from an industry consultant. That was helpful because it kind of gave me a stake in the ground as to how to value. I had a sense of what we valued the company. It did help somewhat. It was kind of a plus or minus 25% valuation. We talked to a M&A firm who focuses on middle market companies. So really companies above $1 million in seller discretionary earnings, larger firms than what we were. And that was interesting in the respect that it gave us more appreciation for working with Klassen and Arthur, the M&A firm valued us at like a quarter of what we ended up selling the company for. And really as I said, they were looking for a bigger company in revenue or a specialized type of firm. So I think it's interesting for those of you out there who are in specialized industries, specialized printing, there is a market to kind of go to a strategic buyer, and that's where they tend to focus, these middle market M&A firms, on strategic buyers, venture capitals. You got to have an attorney and accountant. Everybody probably has an accountant. Then you got to get the attorney. That's, I don't think, breaking news. We did look at two brokers. So we looked at Arthur and we looked at another broker who worked with one of the franchisees that we knew. And it just came down to really two things. I trusted Arthur, I knew him, and I had confidence that the business was going to sell in a fairly rapid fashion. And then finally, the last piece was price. But the first two, for me, were the most important. Arthur met with quite a few, but we met with only 3 prospective buyers. And Arthur did a sale assessment. So a sale assessment's effectively a valuation process, looking at 3 years tax returns, getting behind what's driving your financials and tying the operations into the valuation, into your financials, and then coming up with a valuation and coming up with kind of a game plan to go to market. And that's free, and that helps both parties understand whether they're going to be comfortable working together. And that's the hardest piece from my experience, both on the buying side and helping businesses, talking to businesses about selling, is really coming to a understanding on a proper asking price. Arthur prepared a business profile, went to market, and as I said, we only met with 3 prospective buyers. He was responsible for interviewing the prospective buyers. So I didn't have that responsibility. That was Arthur's. He took that off of me. We negotiated LOI, which is a letter of intent. It's a non-binding top-level agreement of the key principles of the transaction. And then after the LOI was agreed upon with the gentleman who bought our business, we went through the due diligence process. And that's the most time-consuming process for the seller, because you get into all the details of your business. So you want to be prepared to supply all the information that you would want to see if you were going to buy a business. And then I was surprised the bank. So most of the deals for individual buyers, you're gonna get involved with a bank and do SBA financing, and the bank kind of changes some of the terms of the LOI before you get to the final deal. So we had to renegotiate that a bit. Next slide, please. I gotta go faster. So top level, I'll hit these real quickly. We put the business on market May 18th, closed October 18th. We had the final LOI on July 18th. There was about 30 non-disclosure agreements signed through Arthur, so 30 people looked at our business closely. We only looked at 2 LOIs and then the 1 sale. This is what was most important to us when we were looking at, well, very important, I didn't touch on this before, is you want to get cash, right? Most people, sometimes you're going to have a seller's note, but you want to get paid cash for your business. We got 92% of our sales price was paid in cash, and that was enabled through the SBA funding. We got 95% of our asking price. The buyer assumed our long-term debt associated with investments that we made in 2017, and this was nice. All our employees were retained. I think that is also a good news story for when you go to individual buyers versus strategic buyers, because strategic buyer is going to be typically a competitor there's synergies, there's cost cutting. With an individual buyer, you're more likely to keep your employees employed after you sell. And then all the top 20 plus customers were retained. Next slide, please. So I touched on a little bit about strategic buyers. They're typically going to be competitors. They can be customers. I knew one printer who sold, it was a large, good-sized printer who sold his business to a customer who was doing a vertical integration. You can get into venture capitalists. That's, again, going to be tricky. That's scale. You got to be above $1 million in sellers' discretionary earnings. So really, strategic's all about return and fairly risk averse. It's similar to the way I think any of you would look to buy another printer. You're going to be very financially focused. You already have your core base of business. And so you're either expanding into a geography or you're adding capabilities, and you're really looking on return on your capital, on your investment. And strategic buyers will tend to have a little more stringent terms. All that said, I mean, it can work, especially if in the right situation, strategic buyers are out there and do happen. We tend to work with the individual buyers. So individual buyers are people who have the means to put the down payment, get the SBA funding, and they're looking to tend to kind of move out of corporate and get into owning their own business. And they don't want to be ridiculous like I was and start from scratch. They already want the business to be established. They're looking for turnkey. They have cash flow already ready, and they have looking for opportunities for growth to keep on generating a return on their capital. And then the last tends to be a tuck-in. So we've all heard and looked at and probably done tuck-ins in which the business is, you're pretty much putting a small down payment, paying a royalty in the future off of customer sales. You buy some of the equipment, but you're pretty much rolling that operation into your existing operation. Next slide, please. I'm running out of time. What interests individual buyers? So cash flow, generate ROI as you would expect. You want it to be turnkey, almost like a franchise sets up their business so that you have the systems, processes, people in place. Preferably you have some level of differentiation so that it's evident you have a story that you're going to generate cash flow and you have opportunity for growth. And for all the key parts of our operations, you want them to be fairly well established. The one area that tends to be, and this is across all industries, tends to need the most room for improvement is marketing and sales. Next slide, please. So are you ready to market your business? So you want to look at your business the same way you would look at your product or services that you're going to sell to your customers. Is it ready to roll? Would it be happy and proud to put this out for market? And that's just basically how you want to look at selling your business. Do you feel good about it? You want to understand your financials. You want to minimize your surprises. So you kind of go through the due diligence that you almost look at your business the way you would look at another business. So you can understand any potential surprises that a buyer would run into when you're marketing the business. And then I touched on some of the other items. The one thing that is unusual, or common, I guess, or too common, is that when you put your business on the market, and even once you sign the LOI, you have to continue running your business the way you would have if it wasn't being sold. Because you want to make sure that there's no issues that are going to pop up that are going to detract or stop that sale. And that helps to have a broker or another intermediary involved so you can stay working on your business. Next slide, please. The valuations principles, you want a fair market price. It's common. I just talked to a business. We walked away from each other in which I thought the owner was looking at too high an asking price. You got to have a reasonable asking price, like anything else, any other contract or anything else you're looking for, equipment, so forth. You got to see value in that. You got to see return. If you have too high asking price, a lot of people think, well, I'll go really high and then I can always come down. But the effect of that is you'll extend the time to sale and you'll scare away a lot of people. And then they'll look to undercut it. So you actually will end up paying or getting paid less than you would have if you got a fair market price. Financials are key. You're going to need 3 years of seller discretionary earnings. It's coming off your tax returns. And, we looked at, as you would expect, you look at SDE by looking at your reported income, and you look at add backs for, perks and benefits and any one-time events. So you come up with a run rate, an ongoing return, or seller discretionary earnings. You really need to align with the bank requirements for an individual buyer. So in the end, the bank's going to really do an appraisal on your business. So I've run into businesses where they say they don't report all their income on the tax return. All right, that was a gift for you, but you're not going to get paid for that. The bank's not going to finance that. So it really comes down to that. Your mindset, and this comes back to the fair market price as well. You gotta typically look, if you want to sell a business for a decent price, you gotta look at a bank the same way you would look at getting financed for equipment. Are they going to finance this deal? So you want the cash flow, the return on capital. You got to repay the financing they're going to do, and then you're looking to generate owner income. Next slide, please. The current, oh, by the way, I left this off. As you can see at the bottom of each of my slides is my contact information. The current market for individual buyers, there's actually a good demand for a lot of buyers out there. A lot of buyers looking for manufacturing companies. We've had buyers request printers specifically, and they're saying we want manufacturers with strong cash flow. Our inventory isn't broad, but the quality of the businesses we're selling right now is very strong, and they move quickly, and they get a good asking price, or they get a good sale price. You get some of the corporate transplants. We're getting a lot of calls from New York City looking to move into this area. I know that it's got to be hard to find printers who haven't been hit by COVID. So this isn't like earth-shattering. Obviously, you want to minimize the COVID impact, but you also you want a story behind it, right? So you always want a story about how you're dealing with any kind of downturn, any kind of impact to your business, and how you're coming out of it. Next slide, please. So, am I screwing up? I'm over.
No, you're good. Keep going.
Last thing is this intermediary. What you want. You need somebody who can help you evaluate the fair market price. You want somebody who's going to keep things confidential because you don't know how the process is going to go. Confidential with your customers first and foremost. Confidential with your employees. You need somebody to help coach you through the process. I didn't know what the process was. So between my attorney and Arthur, they helped coach me through the process. They also helped, Arthur would call it managing emotions on both sides. So it's obviously a very emotional discussion. It's your baby that you're selling, and you're going to be, as the buyer is going to be questioning your business, you may tend to get emotional. That intermediary's got to help buffer that emotion. As I said, you want that intermediary is going to help you work on your business, negotiate your best deal. And then this, I didn't even think about, but it was huge for us, facilitate the buyer financing. So that intermediary should have relationships with banks and understand the process for SBA financing. And because that's the longest part and the most difficult part of doing the deal. is getting through the bank's process, finding the right banks, and working with them to keep the deal moving forward. That's it.
Awesome.
All right, that was a good presentation, Ron. Appreciate it.
Thank you.
So was it tears or champagne or both at the end of Pixos?
It was honestly tears. My manager, last night I owned the business was Halloween, and my kids are older, so I didn't have to worry about getting it. I was walking around my facility just kind of reminiscing. My manager saw me and said, "All right, let's go out for a drink."
So one question, Ron, just curious, since COVID, is it harder to get those bank loans to finance?
No, surprisingly not. Right now, the bank financing is as readily available as it was before COVID.
It's interesting what you said about buyers looking to move out of the cities, people coming out of corporate. I think as these big organizations get more efficient, if you will, there's going to be a lot of people that are talented looking to start, buy out an individual business. So.
Yeah. And I think a print business is a good fit for a lot of buyers because we're not that complex. We can, they can understand it. And then you either get a financial buyer, which I had, who there's a lot of nice ways to manage the finances, or you get somebody who's versed in marketing and sales and they can apply that to a print business.
We've got one more question here, Ron. From anonymous attendee, what would you have done differently to prepare for the sale?
So as I mentioned briefly, I think one of the area that I would have liked to have done differently is to develop that sales force, which we all know is a difficult part of our business, and that would have helped, I think, broaden the buyer base for us.
Excellent.
Good. I know years ago was a training session where they encouraged you to always run your business as if it's being ready for sale tomorrow.
Yeah.
So that's good philosophy to follow.
Yeah.
Work on your business instead of in your business.
Yes. E-Myth.
There you go.
Thank you. So what do I do? Just step out now?
Yep, we're gonna.
Pleasure having you, Ron, and
Good to see you guys.
all the attendees will
Thanks for
also have Ron's contact info right on the Expo Pass as well. So get in touch with Ron if you have any questions about selling your business. Ron will surely help you out.
Thank you.
It's been a pleasure over the years, Ron. Thank you very much.
Thank you so much.